Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit www.cfds.com for your trading needs. Alternatively, you can visit the educational site, which is www.cfds.education, to certainly learn more. There is the potential bonus on offer, folks, so certainly take advantage of that in terms of your trading needs. Okay, let's try and decipher this market. The markets certainly have been butchered once again, and let's try and work out as to why. Although the only shining index at the moment, or the one that's shining green, is the transports, and we'll certainly do a US market analysis and see exactly what's going on there. Okay, in terms of the summation of the carnage, so to speak, let's just bring up these stats for the day. In terms of the indices, the FTSE 100 absolutely butchered, down by 1%, even more after hours, currently trading at 5610 region. The DAX down almost 100 points, down 1%, down 1.7% on the CAC. So certainly savagery and butchery across the board. So certainly a risk-off, obviously, environment, and the markets are certainly struggling to embrace any risk at all. Okay, in terms of the actual market itself, it really is all about Deutsche Bank. Now let me just bring up the actual Deutsche Bank stock itself, and really the market is certainly consumed by this one particular stock, and really it certainly needs to be put on everybody's radar. Deutsche Bank. Now it has put in a potential double bottom on the 10-minute chart, but as we all know, it's a small time frame, so the markets can certainly be vulnerable to further falls. But at this current juncture, given the monthly chart, if I bring up the monthly chart for you, you can clearly see that we are into that horizontal support zone. So if you want to be bearish at this point, it's a bit late. Okay, if anything, you should really be expecting a potential short squeeze. Okay, really, you've had a statement from the latest statement we've had. Mr. Deutsches Kreien, here we go, I'll bring it across for you. Deutsches Kreien seeks to calm the troops. It's damage control time at Deutsche Bank. Chief Executive John Kreien has penned a letter to colleagues stressing that the German lender remains rock solid despite the pasting being taken by its shares. Shares are down by almost 40%. Now, we also had Mr. Schäuble as well, German Finance Minister, if I bring up this article for you as well. German Finance Minister Schäuble has no concerns over Deutsche Bank. So obviously that's certainly reassuring, okay? Certainly reassuring. So Mr. Schäuble and obviously Mr. Kreien certainly alleviating concerns with regards to the banking crisis that's ongoing at present, okay? So again, that's positive for risk, and that should certainly cause the market certainly to potentially move higher, okay? In terms of the news flow today, we had obviously industrial production, trade balance, export, imports weaker out of the German markets this morning, but the market certainly ignored that. We had the Nikkei down by almost 1,000 points overnight. Again, the market ignored that. Okay, focus more towards, or is at the USD JPY. Now, the Nasdaq, or the Nikkei, should I say, is into gap fill support. We all know China's on holiday. Thank God for that. Otherwise, the volatility would have been exacerbated even more. But the Nikkei certainly is into gap fill support. Gap fill support should certainly help risk globally. Okay, and therefore that's why I've been on the buy the dips mode all day today. So that's my zone. That's what I'm expecting. Okay, in terms of the market. Okay, now that usually means when the Nikkei is into support, usually means USD JPY is obviously potentially into support as well. Now, remember, this market is focusing on two areas. Okay, number one is the yen. Okay, so the yen, you can see here, certainly turning negative and certainly pushing lower, certainly finding some weakness here. Okay, in terms of the yen. Now, let me just bring up the chart USD JPY. It's always best to look at it from a USD JPY perspective. I mean, first of all, the dollar itself. Let's go to a 60-minute chart. You can see it's broken down, and the daily chart certainly is in potential no man's land. But if you bring up the chart of the DJFXCM, let me just bring up DJFXCM. That gives us a gap fill support on the dollar. That's the yen. That's Deutsche Bank. Where are they? Crude oil again potentially into support. I don't think I have that here. Okay, 1 second. Let me just add that in here. DJFN. 1 second. go. And we also need the USD/JPY. Apologies for the delay in these videos. I try my best to make these very quick, concise, so that you can digest them and obviously carry on with your trading. Okay, so this is the part chart of USD/JPY. On a 10-minute, you can see that we built a base, and that certainly is risk on. So therefore, I am looking for a potential reversal here. The dollar certainly to appreciate. Excuse me. You have this pattern here. So inverted head and shoulders on the USD/JPY means the yen is going to fall. Yen is going to fall. It means markets will embrace risk. And now the next chapter we need to look at is the Euro USD. Okay, so allow me just to save this because we are going to be needing this. So number one, Deutsche Bank into support, 10 minutes, reassured by Mr. Cryan and obviously Mr. Schauble. Okay, number one, that's argument number one for a rally. Argument number two, yen is into resistance now. USD/JPY is about to break out higher. Dollar is certainly looking to potentially push higher, and that will obviously help risk. Okay, with the dollar pushing higher, remember that factors into the Euro USD as well. So if I bring a chart of the Euro USD for you, and you'll see why my argument holds. A chart of the Euro USD. Here we go. Okay, so Euro USD on a daily chart, you can see that we are now into that horizontal resistance zone. The weekly chart really explains it more because you are into that fib 61 to 75% resistance on the euro. Now any break higher here, you are going to go into that 1.14 zone, and again this is a zone which will bring Draghi out of the or certainly bring out Mr. Basically it'll neutralize his argument. Any argument put forth by anyone, any of the critics, will certainly be neutralized by this. So certainly bear that in mind, take that into consideration. Okay, so the euro into resistance going into a 4-hour chart. You can see that we have certainly pushed higher on that risk off mode. Now the dollar itself has been weak because number one, you had US inflation data and growth data certainly downgraded, and Moody's did that and the US government did that as well. You also had Mr. Corcholoretta, the idiot, talking about negative rates, which really it's stupid really, given the fact that they've only just increased rates. They are idiots, but that's the Fed for you anyway. So that certainly has caused the dollar to weaken. Red book sales certainly weak as well. Moody's and US government obviously downgrading, which I've explained. Although you did have jolts and wholesale inventories data coming out better than expected, supporting the dollar. But at this current juncture, like I said, it's all about USD/JPY and the euro is certainly into resistance at this juncture, so bear that in mind. So looking for a potential pullback on the euro up to 1.123, 1230, 1220 level, given the fact that we are now almost 100 points higher from that level. So that should certainly help European equities to a large extent. So certainly bear that, take that into consideration when trading. Okay, folks. So that's your three arguments. Okay, for the potential rally. Now let's bring up the actual equities now. Euro stocks first of all. Euro stocks 10-minute chart. We've certainly put a potential bottom in. Double bottom has held at that 2715, looking to potentially propel higher. 60-minute chart, you've put in a bullish engulfing candle, early signs of a potential reversal. Although we did have an early sign of a reversal here with the doji, and that got negated. But at this juncture, with the euro, with the yen, and obviously with Deutsche Bank, all those signs certainly are aligning for a potential thrust higher. But going to a daily chart now on the euro stocks, again you have this diagonal trend line, which we're just about holding at present and looking to potentially propel from there. The weekly chart is obviously into a potential previous resistance equal support, and that certainly is a zone we're going to watch. If that fails, and then obviously you are looking at 2600 as the potential next savior for the euro stocks. But it certainly has been an impressive sell-off, very impressive sell-off. Okay, thus far. Okay, now in terms of verifying it, cross-checking it with the S&P 350. The S&P 350 on the horizontal chart, you can see that we are now into that bottoming tail support, diagonal trend line, looking to potentially bounce from here. So again, S&P 350, Europe certainly looking to bounce. Stock 600, let's just cross-verify it from there. You can see daily chart now is onto that horizontal support, bottoming tail wick support as well, and you are looking at that diagonal channel, lower channel support also, and looking to potentially bounce on the stock 600. Now cross-verifying that now with the volatility index. Let's just bring up the volatility index here. You can see on the weekly chart the volatility, we are into resistance. Daily chart, again we are overextended in terms of the volatility index on the euro stocks. The volatility index on the CAC, you certainly have a a topping tail in, indicating that you are looking to potentially move higher. Okay, so sorry, lower. You move lower. So certainly exhaustion of the bull trend. So the fear indexes in Europe certainly are into resistance, which in turn should help the European stocks move higher. Okay, looking at the CAC 40 now, double bottom again on the 10-minute chart. So certainly looking to potentially base out here, looking for a potential reversal. Okay, the 10-minute chart certainly has an argument here for a potential. Again, it needs to brew further, but you are looking at a potential reversal on the cards again on the 10-minute after that double bottom. 60-minute chart, bullish engulfing candle, we're consolidating within it with good volume, so certainly some conviction there on the buy side. Okay, the RSI obviously remains oversold at this current junction. You are looking for potential bounce given the fact that we are into that lower channel support. Weekly chart of the Eurostar of the CAC, sorry, you are looking at horizontal support and looking for that support zone to hold. Okay, so these are all zones that are very, very important for the French CAC and looking to potentially bounce. Again, Euro CAC certainly seems to be in the bullish category. Now the German DAX, this is the index that's the most important. Let's start with the weekly chart and we'll work on the smaller time frame. So obviously ever since we pierced the 200 MA, again that is support. From a horizontal perspective on the index itself, you have multiple zones of support that certainly are crying to trigger a short squeeze rally. Now the daily chart on the German DAX, lower channel support, yes, we have broken that key 9350 zone. I mean, that certainly is a dent and certainly does help the bears. But from my perspective, the way in which I'm looking at this market, you are looking at a potential bounce from this zone. Okay, the 60-minute chart, you have this expanding contracting wedge pattern, and this diagonal trend line certainly is holding. You have a bullish engulfing candle, you're consolidating, all positive signs for a potential rally, especially given the fact that the euro, like I said, is into resistance, and that should certainly help the risk trade, especially with the yen obviously being into resistance as well. Okay, looking at the chart of the German DAX now, again you haven't made a lower low, which again is a positive sign. Looking to make a higher high now and looking to potentially break out this zone and test that 200 MA. 9200, 9300 certainly beckons from my perspective, the way in which I'm looking at things at present. Okay, so that certainly is a zone to certainly observe and watch on the actual chart of the German DAX. So again, looking for a potential bounce here. And now the final index is the FTSE 100 daily chart. As you can see, double bottom support at the region of 5640. So again, watch out that 5640 zone. 60-minute chart, we have failed and to hold that key support at 5640. We are consolidating below it at 5630. And given the fact that oil prices certainly are under immense pressure, the oil price will need to be watched carefully with regards to FTSE 100. Okay, 10-minute chart, FTSE 100 at the moment, we are potentially putting in a base again, double bottom support here too at the 5600 zone. Again, that's quite an important zone to hold, or should be expected to hold. And we are looking to potentially move higher on the FTSE 100 now. You have this diagonal trend line, so again you see expanding falling wedge pattern, generally does signify a potential bounce is coming. Okay, so if you could behold that base at 5600, then you are looking to potentially propel higher into the zone of 5790, potentially into the zone of 5740. So certainly looking for a move higher on the FTSE 100 itself. The resistance at 566 is going to be very interesting, and the support at 5600 certainly will be interesting too. So those are the zones that we need to watch very, very carefully in terms of the index going forward. Okay, in terms of commodities, again, that's going to be important in terms of crude oil. Crude oil is back into that potential support zone, so that support zone is seen at $29. So watch out for that. If that breaks, then you are going back to 28. It's going to be very hard given the fact that we have news with regards to the Saudis invading Syria, so again that's going to be interesting. Brent crude again is certainly looking very weak. Again, that support zone is seen at 30, and that's a zone that we're going to watch very carefully, which in turn should help support the FTSE 100 to move higher. Okay, I think that's a market wrap. Be sure to watch the euro, the yen, and like I said, Deutsche Bank or banks themselves certainly will look to stabilize. Watch out for the US banks, so all eyes on US banks now, see how the market reacts. Okay, that's a market wrap for Tuesday. Be sure to visit cfts.com for your trading needs. Goodbye now.